So on Valentine's week, should investors love this growth tech rally or leave it?
Love it or list it.
Love it or leave it. I bet we're going to hear about both options. John Fort is here to weigh in.
Yeah, Joe, leave it. I know it's hard for investors to see those charts going up and up every week while you got money on the sidelines. By the end of 2022, you'd licked your wounds on the losses. You said you were done with that risky, unprofitable stuff. And now look at it. C3 AI was $11 on January 3rd. Now it's 25. Tesla has doubled off its lows of the first trading day of the year. So why leave it? Because the most important things about this economy and this market still haven't changed. Inflation is far from tamed, with the January Consumer Price Index up 6.4%. The labor market is hot, with more than 500,000 jobs added last month. And the names that have been rallying most are some of the riskiest. It's like in high school, where you could tell how a party was going to end by the mix of kids who showed up late. Virgin Galactic is up 70% for the year, and Bitcoin is back near 25K, which Charlie Munger is very excited about. The cops are breaking up this rager by 1 a.m. Leave it.
It's not as if everything that's rallying is low quality, though. There's been a rebound across the board in tech.
Well, Joe, unlike Charlie Munger, I am going to argue the other side. On the other hand, there's a lot of treasure in this rally. To understand it, you have to first admit that the 2022 growth tech sell-off went too far. We got to the point where investors were openly saying to avoid tech at the moment when we're standing on the cusp of an artificial intelligence-driven productivity revolution. So, of course, C3 AI popped this month once investors realized AI is more than a buzzword. Microsoft can use it to challenge Google in search, and C3 has real customers like Baker Hughes and Raytheon, or NerdWallet, which just had $1 billion market cap but did more than $500 million in revenue for the year, grew revenue 43% in Q4 and was GAAP profitable. Or Roblox, which delivered a beat on bookings and EBITDA 80% better than the street expected. And no, Roblox isn't profitable, but its model is working, and bookings are up 21%. So it's not to say there aren't trash stocks out there. There are, but there are interesting long-term bets too, Joe.
There's a lot of analogies. I don't know if it's the early days of the internet, but with AI or all these things that we're going to see and we've talked the advances. The time between major advances is getting closer and closer. There's no doubt, and you can take that back 1 billion years to see DNA and everything. But would you like to be Paul Krugman and have said?
In general, no. I like
the internet is going to be no better than a fax machine. Yeah, in general, no. But the internet is going to last no longer than a fax machine. He's on record. He said that.
Yeah.
So you could say the same thing. Maybe people saying that about Bitcoin now or in a similar position.
AI.
Or AI.
Or AI. Well, with AI specifically, I think we're at least in that Web 2.0 period, where, do you remember that innovation was really speeding up on the web because you had Gmail, you had Google Maps, you were able to put different data sets together and deliver a faster, better experience? That's where we are with AI. This is quickly monetizable. How deeply it changes competitive dynamics, I think, is yet to be seen. How much of an advantage is Microsoft going to get, is some small company going to get from applying AI to an area where an incumbent is already dominant? Once we start seeing those toppled, then that's something else.
Thanks, John.
Thank you, John.
Good to see you in person, as always.